Hello and welcome to The Print. I'm TCA Sharad Raghavan, Deputy Editor, and now the budget is nearly upon us. And there's a lot of expectation from the budget. There's a lot of talk about what is happening with the economy, a lot of things that are wrong with the economy, and a lot of people have pointed out the problems. But this time, today, what we're going to try to talk about are some of the solutions that the budget can implement. And to do this, we have the perfect person. It's Mr. Madan Sabnavis. He's the chief economist at the Bank of Baroda. And why I say he's the perfect person is because in all of my time talking to him throughout my career, he has had real practical insights into what needs to be done, what can be done, real things that can be implemented. So thank you so much, Mr. Sabnavis, for joining us.
Thanks a lot, Sharad, for having me on your show.
Thank you. And okay, so Mr. Sabnavis, the first pain point that a lot of people are talking about, that the data is also showing, is to do with urban demand. So, what are some of the things that the budget can realistically implement to boost urban demand?
Okay, the first thing is that we should realize that a budget is an income and expenditure statement of the government, just like we have a profit and loss account for a company.
Right.
Okay, so there are a certain amount of resources which can be garnered, which has to be spent given the different priorities which are there. And everything is contingent on what happens to the overall growth in the economy. So I think that's why we talk of the nominal GDP growth number being important, because everything is decided based on a certain amount of growth which is taking place in the economy. So the point I'm making here is that the budget is not a panacea for our problems. And what the budget can do is that by making certain announcements, it can do certain kind of nudging in certain directions on certain aspects of the budget. Now, when you're talking in terms of doing something to raise consumption, the obvious thing is that you start reducing the income tax rates. Okay, that is a solution which is there. You need to do it in a big way. When I say a big way, it should not be a kind of a marginal or a minimalist kind of thing where you do something at a lower level where you don't take much of a hit in the budgetary numbers, but you're able to say that, okay, people at the lower income groups will be getting a higher standard deduction. Maybe that particular slab will change. But if I'm looking at using a fiscal tool to increase overall consumption, I have to do it across the board. Because if I look at the middle class, for example, we have a higher upper middle class, and a lower middle class. I need to do it at the lower and the middle class levels. The rich probably have a lot of money that's not really going to be affected on account of tax rates changing. But if you're able to do something maybe in this region of 10 to 20 lakhs, 10 to 30 lakhs, where that is where typically your income is, where I would say people get affected by inflation, you cannot really discount inflation, but at the same time, you're not really in the lower income groups. I think that is where it could make a difference. But we should remember, as I started off by saying, that it's an accounting procedure, the entire thing on the budget, where you have various policies which go around it. If the government has to give something big, it'll also mean that you'll take a big hit in your own revenue. So
Right.
there is talk of saying that you'll have a drop of 50, 60,000 crores of revenue by doing these kind of income tax exemptions, or maybe you cut the rates. But that will also mean there'll be that much of more pressure on this entire accounting process which you're talking of. So I think that is basically the kind of a trade-off which the government has. And they will probably tell us on the first as to how far they think they're willing to go in order to account this particular demand which has come, especially from the households.
But then on the flip side, already this year we're seeing that government capex has been going very slow. At least the April to November figure was 12% lower than it was in the April to November of the previous year. So, I mean, they might be looking at trying to save on that end, that, we might be getting less revenue if we cut income tax rates, but we're also planning to spend less.
See, the spending part on capital expenditure this particular year, it has been affected on account of the elections. I think that is something which did push it back substantially. And by the time you start picking up and you are trying to execute whatever capex you have, what we say the utilization rate of your capital expenditure, we're coming towards the end of the year. So it is a question of saying that does the government have the wherewithal to have to carry out this much of expenditure in the next couple of months? The answer is probably no, because you need to have a lot of projects already on hand. Projects should have started already. That's where you can keep spending money in terms of completing it. So my sense is that there will probably be definitely a shortfall in terms of capex this year. That is for 24-25. The 11 lakh crores which we spoke of, even if I remove the part of which goes to the states, which is based on achieving certain targets based on certain parameters, I think the government could be falling short of maybe around 1 lakh crore or so. So instead of 11 lakh crores, we could be spending something like 10 lakh crores for 24-25. So when we go into 25-26, I think the logical thing is that you go back to this level of 11.1 lakh crores, which the government had targeted for 24-25. That becomes a target for 25-26. It would still be an increase of around 10% over what was the revised estimate of 24-25, assuming that we have this kind of shortfall. So that is definitely something which we are hoping that because capital expenditure will be at the same level as that year. So even in case there's kind of a shortfall in terms of revenue, there could be some kind of compensations in terms of your capital expenditure being lower. Maybe some kind of rationalization on subsidies may not be very significant, but even something like 10-20,000 crores on food and fertilizers could help to ensure that the fiscal numbers don't go they don't go all right. So that is something which is definitely possible. But I think the starting point of the government is going to be the fiscal deficit ratio. If they're going to look at 0.5% less compared to whatever is achieved, we think it may be 4.8%, which means you target 4.3%. And then accordingly, you build to say, okay, we're assuming a certain growth rate in GDP. This is what's going to be my tax revenue. This could be my non-tax revenue, certain committed expenditures like your interest, defense, maybe a large part of your subsidies. And then the residual, which could be your discretionary capital expenditure, maybe some savings, as you're saying, could of 24-25, something which would help to buffer 25-26 numbers. Yeah, that's something which can be worked out, but the exact numbers are something which we need to see. Because as I told you, if the number is not large, it's a zero-sum game. If the government has to lose a large amount in terms of income tax collections for it to have any discernible impact on consumption, if you don't do it, if it's not a large amount, then I don't think it'll matter anyway.
Right, I understand. And the second pain point seems to be private investment, and how, although it is happening, it's not happening at the level that even the government wants to see. The government has talked about this before. Now, a lot of people have said that this is dependent on factor market reforms, things like land and labor. But a lot of those either are stuck or they're going to take a few years to properly build consensus on and to implement. So are there any short-term measures that the budget can implement that could act as a fillip to private investor sentiment?
Actually, Sharad, I have a different view out here because when we're talking about private sector investment, let's go back to the question as to why is it that private sector invests? You invest because you want to ensure that you get a return on capital. So if I'm going to put 100 rupees in terms of putting up a plant and machinery, I should make sure that I'm able to produce the kind of goods which I'm able to sell in the market. Okay, if I'm able to sell in the market, I think nothing else matters. So the important part is that we need to have enough demand. The difference between the private sector and the government sector is that the government can spend on capex because it never looks at the return on capital. It's more a case of ability to implement projects. Like how many more roads can you construct? At some point of time, you cannot be spending 11 lakh crores. You can't put everything into roads. How many one day Bharat trains are you going to have? So there would be a kind of a barrier which we will reach at some point of time. That's a different set of issues. But for the private sector, I think the fundamental problem is we're not having enough demand. So what's happening is if we're looking at the overall structure of what were the private investments which are taking place, all the industries which are generally linked to government spending on capital expenditure, that is primarily in the infrastructure sector, they're the ones who have good capacity utilization rates, and they're the ones which are actually investing more in capital. So if you're looking at cement, you look at steel, look at engineering, maybe a large part of chemicals, there is a lot of investment which is taking place. But if you go back to the consumer goods sector and say that are these companies investing, the answer is probably not. Why? Because you have surplus capacity. So if you're operating at maybe 70, 72, maybe less than 70% capacity utilization rate, there is still scope for you to produce goods in case demand picks up. Typically in India, we say 78 to 80%. That's kind of a thumb rule that if I've reached that particular level, then there is incentive for me to invest more. And that's when I do investment. So I think things like land, labor reforms, I think are excuses. I mean, these problems have been there right for, I don't know, since independence time. There have been marginal changes coming through. That has not really deterred investment. You take it as saying that, okay, doing business is difficult, investment is difficult. There are certain constraints. It pushes up my cost of doing business. But at the end of the day, if I have a buoyant demand, then it should not really matter much. Otherwise, as a businessman, I'm not going to stop investing just because land reforms are not taking place. Okay, land reforms are not going to take place anytime soon. Okay. None of us want to change our own locations. I'm sitting here in Bandra Kurla complex. If I'm told that my office is relocating to the outskirts of Mumbai, I may not be inclined to work out here. And that happens everywhere. If we say the entire parliament in Delhi, you shift to Noida, not in New Delhi, you will not like that. You say you shift Bombay Stock Exchange, need not physically be there where it is. You move to the suburbs of Mumbai. No, we cannot expect the farmers to do all these changes for the sake of national good. So I think there are serious issues when it comes to land reforms. And I think even in terms of labor reforms, I think there are issues. In fact, it's quite absurd that people say that labor reforms are a problem. We are seeing in the private sector people lose their jobs very easily. Okay, it's not a case of saying you can't sack me. People lose their jobs very easily. So I really don't know where if that issue is really very serious or it's a kind of an excuse which is being made. But suffice to say that at the economic level, we definitely need to be having greater demand coming in. More demand comes when you're able to create more jobs. Today, we are creating jobs, but probably not in the skilled variety. We're having unskilled jobs being created, logistics sectors, construction sector. The kind of incomes which you get don't give you that kind of spending power. So the headcount is definitely increased. As we keep skilling, I think that's what the PM, FM all have been talking of, saying that we need to have more skilled labor force. We need to invest more in education so that people are able to be employable in what we call the formal sector. See, the government is giving a push. If you look at last year's budget, internship, you're paying the Provident Fund for a month or 2 months, whatever it is. But how long can the government do it? Finally, the private sector has to take on the onus. Okay,
Absolutely.
so I think the ball is actually in the private sector's court, and they will do it based on commercial decisions. So things cannot be transformed in a budget, or the government cannot change it. It's something which happens gradually over a period of time.
So then it comes full circle again, where if the government can substantially cut income tax rates, that might spur demand once again, which might spur at least these FMCG companies, the white good companies, to start investing some more.
Absolutely, that's true. But another thing, Sharad, the point which has been missed is that while the FMCG companies have gone on record of saying that their demand has been affected in Q1, Q2, and I think the story will be the same for Q3 also, where they may say that our profits have been affected because we have high input costs. We have actually seen the semi-branded or the local products of the same things which are being produced by the major, what you call the big companies, which the MNs, the multinationals, or even the domestic companies. I think their products have actually been selling. So I think people today, because of high inflation, have become more cost conscious. So if I have to use maybe a washing powder for my washing machine, I may not be using the so-called elite brands, which earlier was being used. But there's so many local brands which come at a lower price. So there's been some kind of shifting which has taken place to what I call the unorganized sector. It may not strictly speaking be the unorganized sector. It could be the local brands. So it's not to say that people have stopped brushing their teeth, they stopped shaving because prices have gone up. Yes, prices have gone up, but have probably migrated to other kind of products. And this doesn't really get captured in our GDP numbers because it's difficult to, we don't have a system to capture this. We use proxies. We say unorganized sector for IAP. I'll use the IAP numbers for manufacturing. Sorry, I don't because I don't get this information from any source because it's unorganized. Collating data is an issue. So we're having a kind of a dualistic kind of structure out here. But yes, formally say yes, we need more consumption to take place, and that the government cutting income tax rates substantially is something which could help. But personally, I think it's not going to be very big because that 4.3, 4.4% fiscal deficit number is going to be taken sacrosanct, and that's going to be the starting point for the budget.
Okay, so now apart from the budget, 1 week later, the RBI's Monetary Policy Committee is going to sit down and decide whether to cut rates or not. And that's another big discussion. A lot of people are saying that now finally it should. It's time. Growth is suffering and inflation seems to be in control. Do you agree with this assessment that Feb itself they should cut rates, or should they wait it out a little more?
In fact, my view on the repo rate cut has been as volatile as the stock market or as bond prices. Because, maybe a couple of months back, I said that if after the December policy, I felt there would definitely be a repo rate cut in the month of February. And subsequently, when we had the Fed saying there'll be only 2 cuts and not 4 cuts, and we saw the volatility in the forex market, I thought that yes, now it's a stage where you cannot actually cut the repo rate at this point of time. When there is too much of volatility in the forex market, imported inflation can go up. FPIs are withdrawing investment funds. The Fed is not going to do what we thought it will do. American policies may not exactly be congenial for other countries to start lowering rates. So therefore, I felt that things are going to be held back for one more policy. To top it all, we had the liquidity crunch, which was there. So we've seen the deficit in the system is around 2 lakh crores, 3 lakh crores. So I said, you cannot really cut the repo rate at a time when there's no money in the market. Okay, because if I cut the rate and then banks want to lend more, I don't have funds to lend.
Right.
But talking to you today, not yesterday, we had this thing yesterday of the RBI announcing steps to infuse new liquidity, which looks like that the RBI also feels that the sequencing which is required before you cut the repo rate, I mean, that's a necessary condition to make sure liquidity is normal. So therefore, they have tried to normalize liquidity over the next 20 days or so. So I would again change my stance and say that, look, today it looks likely that a repo rate cut could be invoked. Though to look at it at a different perspective, I would say that if the target for the Monetary Policy Committee is to make sure inflation is 4%, today, if I look at my last 4 inflation numbers for the months of December, November, October, and September, they've been above 5%. Can you actually take a stance of saying I'm going to cut the repo rate? I agree that prices are coming down for food products. Vegetable prices are coming down. The inflation number for Jan, Feb, March will be what the RBI has projected, around 4.5%. So it's more of a futuristic view on the basis of which you can cut the rate. So again, I think that it's evenly balanced. Though I would tend to believe that based on the fact that 2 of the MPC members last time did vote for a rate cut on grounds that growth is something which is getting affected. Therefore, I would tend to believe that there could be a rate cut. But now when you're talking of growth, I think on one hand, we keep saying that India is the fastest growing economy, which is a fact. 6.4% also is a very good number. It is not very different from 6.6, which is what the RBI had in mind. Also, the government of India had 6.5 to 7. And for all you know, once the actual numbers come through, we may be in the region of 6.5%. So I don't really think the economy is slowing down. There are always blips. I think the FM said it, the Q2 numbers was a blip, which I also tend to agree. The second quarter was a blip. We've seen a revival of consumption to a large extent, based on the GST numbers. So it's a fairly, I would say, it's a fairly confused picture as of now. You're saying consumption is really picking up, not picking up. Companies say it's not picking up. GST says things are doing very well. The unorganized sector is doing relatively better when you're talking of manufactured goods. So it's fairly hazy because we're seeing lots of different factors which are working. It's not very clear. But the 6.4% number itself, to my mind, is fairly good. It's a stable number. We'll probably move towards 7% next year. So using the plank of saying that growth is slowing down and therefore I need to lower the interest rates, I would probably not be on that side. But if we firmly believe that we need to improve the sentiment, inflation is going to come down. Definitely, we won't have 5% number. It's going to be between 4 and 5 in the next couple of months. I think that could be a better explanation for saying that futuristic inflation is going to be down. So therefore, let's lower it. Now, to the thing of saying that if you lower the rates by 25 basis points, 50 basis points, will people come and borrow more money? Now, if I go back to saying if I have no demand, am I going to borrow more money? Okay, if I'm a company, I'm working at 70% capacity utilization rates merely because the repo rate has come down from 6.5 to, let's assume, even 6% in the next 2 policies. Am I going to rush in and start borrowing more money? The answer is probably no. It'll be done very selectively. And we should also remember that today we are operating on varying interest rates, meaning thereby that I don't have a fixed interest rate when I'm borrowing money. When I borrow money to buy a house, at certain points of time, I'll be paying maybe 7%, 8%. Sometimes it could be 9%, sometimes it can go down to 6%, depending upon the interest rate structure. So I'm not quite sure as to how decisive is the current interest rate when somebody goes and borrows money. See, even as an individual, if you're buying a house, you know very well that this is all based on the external benchmark. So if the repo rate at some stage is going to go back to 6.5%, then you'll be paying a higher rate. At some point of time, they come down to 5%, in which case you pay a low rate. And you're going to borrow money for, say, 15 to 20 years. That's the time period for a home loan. So I'm not quite sure, convinced that just by lowering the rates, people are going to rush in and keep borrowing more money. But yes, that is what conventional theory says, and that could be a kind of a clinching argument from the point of view of the MPC members that okay, growth has slowed down, inflation is coming, is under control or will be under control. So therefore, let's go ahead and lower the repo rate. So if you're asking me to commit to saying that will there be a cut or not a cut, I'll say yes, probably there will be a cut.
Okay, great. And now coming back to the growth question, we've talked about consumption and we've talked about private investment. To an extent, we've talked about government expenditure as well, but I wanted to talk a little more about that, where in the last few years post pandemic, it has been government capex that has kind of boosted growth in a big way. And this year, the current year that we are talking about, the amount of capex has been lower than they'd even budgeted, and we've seen that growth has suffered uh, as a result, or whether for other factors that we still need to see. But there is a correlation, even if we haven't established causation. So, do you feel that to move towards 7% growth next year, just a 10% increase in capex might not be enough? The government might need to increase it by more?
See, actually, Shana, I don't go with the view that the government is a major. It's of course it is a critical factor when it comes to capital formation. But let's just look at let's put some numbers, very broad numbers. If
Right.
I'm talking of my GDP of around 32, 320 lakh crores, my overall capital formation is let's assume 30%. So let's say 90 lakh crores or 20, or 100 lakh crores. Government is contributing to maybe 10 lakh crores. The states are contributing to maybe another 7, 8 lakh crores. So if I add
Mhm.
up all the governments, maybe 20 lakh crores. So around 20% of the capital formation is being financed directly by the government, directly or indirectly by the center and states. The rest of it actually comes from the household sector. It comes from the private sector, where you're also using companies are using their own funds for the sake. So if you actually add up all these numbers, I think we are trying to throw too much of the burden on the government. The government does only a certain part of it. It's actually what the private sector has to be doing. And today, when we are talking of what's really driving the economy, it is the private sector which drives it. It's manufacturing, it's services. Whether you're talking of services, I mean, you're talking of IT sector is doing it in a big way through the service route. We're talking of tourism doing it. The problem is that manufacturing is not actually been doing very well in the last 5 years. In fact, the story was like this even before COVID. So there's clearly a case of saying that if we have to get that 7% growth, the government can do its part by doing this 10 lakh crores, 11 lakh crores, 20, 12 lakh crores. But at the end of the day, it has to be the private sector which is investing. We cannot
Right.
have the government doing it because the government spends in limited areas. See, the central government spends primarily in roads, railways, and defense. That's around 70% of your capex is in these three areas. And as I mentioned, there are also limits to it. I'm okay having metro system, I'm having Vande Bharat, I'm doing some kind of modernization of tracks, but we have a limited amount of land on which you have tracks. So how much more are you going to keep spending on railways? So the execution part is also very important. That can we actually execute so many more highways? Okay, so even the states have the same problem. If you look at the state government budgets, they have the same issue of saying that do we have the ability to actually implement these? Because you have a limited amount of administration, limited amount of expertise which are there, the skilled people who actually look into this project implementation. And then you're looking at saying that I have to do a certain amount in the course of the year. So what the center has done is fairly amazing. If you see what the capex was prior to the pandemic and what it's today, they have managed to actually do a very great job. You're going 10 lakh crores. I would say even 11 lakh crores is big. It's a very large amount. And if I take you back to what the FM said last time in her speech, because I think even last year there was a slippage in terms of capex, she said, please don't expect that every year we can keep increasing by 20, 30%. Because even my size of the budget doesn't increase by more than 10%. So if my size of the budget is 48, 50 lakh crores, it's going to go up to maybe 52, 53 lakh crores, the maximum. 5 lakh crores could be my increase in the size of the budget. And everything is inflation adjusted. So my subsidies go up, my fertilizer payment go up, pensions go up, salaries go up, everything goes up by a disproportionate amount. So I think we should not be overemphasizing saying that the government should go and spend 15 lakh crores or 20 lakh crores. That's not something which is going to happen immediately.
Okay, I understand. But on that note, thank you so much for running us through all of the various components that we can possibly see in the budget. Thank you so much.
listeners.